We just got the crypto summit, but we also just got some words from Powell saying key interest rates will remain unchanged in the coming months. Why is this so important? This gives a more neutral or dovish stance from the US Federal Reserve, making whose economy more attractive from a tighter monetary policy. We're seeing Japanese government bond yields above 1.5%, and that is because institutions are running away from the US economy. We are seeing the DXY, the US dollar index, weaken rapidly. And of course, gold still testing all-time highs. Now, we have seen several major warnings from big institutions, big players. God, it feels good to be back. We have a lot of stuff to talk about. Make sure to watch until the end of the video, like the video, subscribe to the channel, and turn post notifications on. The only official in charge of overseeing banking regulations has permanently just stepped down. Permanently resigning is Fed's Michael Barr right after Elon Musk's Doge, Department of Government Efficiency, intensifies their efforts to audit the Fed's monetary policy. Guys, the US stock market has been under extreme overvaluation. Institutions are going for bigger returns in the Japanese market. We also seen China cut their US Treasury bond holdings to $759 billion in December of 2024. Japan as well, reducing their holdings by $27.3 billion in December. We have had major warning signals on the entire market. We need to talk about the levels. We need to talk about what happened. We need to talk about the Bitcoin crypto summit, and we are back talking about AMC and GameStop right after I cover these. A lot of people are wondering, well, you haven't been covering AMC and GameStop too much. I've been away. I've been gone for a week. I have made videos briefly touching on the overall market and briefly touching on AMC and GameStop within that. And the reason is because they tie together. You need to make money on the sidelines as we wait for AMC and GameStop. I will state where I think we are, what's happening next, what will happen with the overall market. And as of right now, I told you in the video that I posted a few days ago, I said if we break under 570, you're going to see 565 very, very, very quickly. If the SPY cracks under 570, that is a floor on the SPY, it will get very dangerous. You're probably going to see 565 very quick. SPY broke below key levels. We cracked beneath 570, immediately came down to 565.60. And we got bought back up, which we will talk about. I just want to state that also China announced a 100% tariff on select Canadian imports. This is absolutely a trade war. China's not stepping down. It is not now, as we are used to seeing it, all sunshine and rainbows where people bow down to Donald Trump. At this point, this is a trade war. The stock market is overvalued, and Trump has specifically stated that he isn't even watching the stock market. I also want to state a lot of bad news has been good news, apparently, and good news has been bad news. But there is one thing that we are seeing, and it's that institutions aren't buying. Institutions are selling. Stocks are overvalued. If we take a look at the SPY, we had a huge red weekly candle. We are down 7%, while we were down 7.7% total from the all-time high down to the wick down here at 565.60, and we got bought back up, only down 6% from all-time highs. You can see this green candle right here. A lot of people were super hyped about this green candle. I'm going to tell you why it's a nothing burger, and I'm going to tell you why it's important. I have stated, calm down, don't pay attention to the news, just watch the charts. The bearish case scenario, the bearish thing I see in the charts is, one, we cracked beneath this key support level. And if you zoom out on the daily time frame, this is a key macro support level because we have been in this macro uptrend, this ascending parallel channel right here that we tested back here all the way at lows. And the third time we cracked under it, and we cracked under it hard. We also came up to almost retest it right here and got rejected right around 586. So we have a key break. On top of that key break, if you look at the volume on the weekly candle, well, what do you see? Well, you see the SPY get to an all-time high, and you see faded volume, very, very little volume, which means a weak push higher. Buyers were not ready to continue to buy this thing up. There was no reason to. The stocks are overvalued. The market's overvalued. But what happened when you saw the downturn on the overall market? Well, the 2 weeks that you see right here, these two big red candles, you saw major volume, and then you also saw an uptick after that in volume on this weekly candle. Now, this is very important because it shows that this is accelerated selling pressure. The markets are still in extreme fear. Now, I will give you the bullish case scenario, if we take the drawings away right here, here is where you see major order blocks on the S&P 500. And if we fail these levels, it's going to be game over. And this is the next level to watch. As of right now, bull case scenario, we see the SPY dipped into this box. 566.40 was the beginning of this box, and SPY decided that it wanted to bounce at 565.60, 565.80, right? Barely got into the zone, but you can see we did get into the zone. Tons and tons of buyers are in this zone. Now, if we crack beneath this zone on accelerated volume, which is below 560, okay, so anywhere between 560 and 565, you have major order blocks where people are going to buy up this thing. If you see selling pressure outmatch this, you will have a very quick free fall down to, in my opinion, between 540 and 535. And if we can't even hold that, right? If we are still getting volatility, you might see a rejection at 545 and ultimately come lower into the next order block zone, which is down to 522. It will be very hard for the S&P 500 to break anywhere under 494. I don't know if that would happen. It will also be very hard for it to break under 510, but the least hard level for the S&P 500 to break under is this first order block zone that you see right here at 560. Again, if we come back, the more we retest 565, the less and less dry powder that will be in this order block right? It will be deteriorated the more you retest it, and then eventually will free fall. Stop losses will get triggered and it will continue to free fall. So what do we watch coming into the week for Monday? Well, as of right now, don't be surprised. I mean, I wouldn't be surprised seeing how ugly these candles were if we got a relief bounce, which we did on the daily time frame. And that relief bounce could take you probably up to 580, maybe even a little bit higher. Now, I'm not calling for this. I want to put that out there right now. I'm not calling for this. The SPY looks very bearish still, even though it is testing critical support. We didn't get a big enough bounce, in my opinion, that we would have liked to see, or at least bulls would have liked to see on the SPY. First level you need to break over is 579. Next level you need to break over is 586. If we get above 586, we watch it closely. If we get above, close and open above 590, then we can call off the downtrend, at least for now on the SPY. Do I see that happening? Not really. I'm still bearish on the S&P 500. With this accelerated downward momentum, best case scenario, we see crypto Sunday evening bleed off. If Bitcoin, which we're going to talk about, cracks below a key level, which is 85,000. I'm going to cover it in a minute. Then we'll tell you what happens with the S&P 500. Now, I want to bring this up really quick. 210 trillion in derivatives. The time bomb is ticking. The top 5 US banks are drowning in 210 trillion plus of derivative exposure, which is 10x the US GDP, so on and so on. Now, why am I bringing this up? I'm bringing this up is because the over leveraging that is in the market, the collateral requirements amongst volatility will be risen. The over leveraging in derivatives, all of this selling pressure. People ask, well, isn't a market crash bad for AMC or GameStop? Not necessarily. If you want a super squeeze, then you have to have it uncontrolled. And the way to have it uncontrolled is to forcefully trigger margin calls. That way, there cannot be a controlled leg up like we saw in 2021. Obviously, when the buy button was taken away, at first, it was uncontrollable. Last thing I just want to state, the S&P 500 did bounce back up above 575 and close, which is technically bullish. But you can see this is still resistance. Okay, this is still resistance. If the SPY opens under 575 on Monday, I'm just expecting it to bleed right back into this range. Also, Putin has said to be ready to agree Ukraine truce with conditions. Okay, so we saw the Bitcoin summit. Now, U.S. Secretaries of Treasury and Commerce are authorized to develop budget-neutral strategies to buy additional Bitcoin for the reserve. What does that mean? Why are investors taking the crypto summit as negative? Well, the government will hold 200,000 Bitcoin sourced from seized assets as of right now. The strategic Bitcoin reserve is a thing, but why is it a little bit underwhelming? Well, they're not actually going to put any effort into it. They're not actually going to purposefully purchase Bitcoin. It has nothing to do, it can't dig into government funding. It can't dig into taxpayers' money. It can't dig into anything. And basically, the only way that they can invest into Bitcoin is a budget neutral strategy, meaning seized assets they can go over and buy Bitcoin with and other things along the lines of that. We also saw a bunch of nothingness, right? Basically, the basic breakdown of the crypto summit was, hey, we're here, we know crypto's a thing, and it's probably going to be important for the economy. It was throwing the public a bone because Trump got elected and he made Bitcoin promises, and as of right now, he has not stood to those Bitcoin promises to the degree people wanted him to. Again, I'm speaking very specifically, I'm not getting political. To the degree people wanted him to, investors wanted him to, he didn't step to that degree yet. So he came out and said, hey, let's throw him a bone. Let's show them that I'm still, looking at Bitcoin, but realistically, there's other stuff that I got to worry about. Now, if we look at the Bitcoin liquidations chart, this is pretty important because when Bitcoin dropped down to this level down here at 84,000, 85,000, you see a lot of longs stepped in. Okay, you see that we see 607 million in longs and 151 million in shorts. However, we peaked up here, right around 93, 94,000, and what you saw was almost 600 million short, 250 million long. Now, the extra 100 million long, the 250 from the 150 short at 85 is basically just people who don't sell. Now, we come back down to the mid-range at 86,000, and we are seeing a little bit more longs here. Now, I do want to state that Bitcoin, now this is important because we're seeing a little bit more longs here at 85, 86,000. Actually, a lot more, 95 million to 24 million short. Now, market makers, the liquidity grabs that are going to happen is likely to push Bitcoin a little bit lower. That way, it kicks longs out of their positions and liquidates them. Okay, there's more longs to be liquidated than short positions here. However, why is that bad, right? Well, that's bad because the level is at 86 to 85,000. Now, if they liquidate people here, Bitcoin will crack beneath the level that I want it to stay above, which is 85K. You can see that right here, 85K. If we get back beneath 85K, Bitcoin's going to look ugly. You're likely going to flash down below 80 once again. And in my opinion, you come down to 73. Okay, right now, if we take the drawings away, again, you have that huge order block. Where does that order block fall? 73K. 73K, this will get bought up if you see a wick down to there. Between that and 69,500, and I see that happening. I see that coming. If Bitcoin gets at all above 97,000, there are major order blocks, sell order blocks, huge blocks, okay, honestly, all the way between 97,000 and 109. The momentum Bitcoin needs to get back to all-time highs, and push through here is astronomical. Right now, there's extreme uncertainty. There's not a catalyst for it. And I am more bearish than bullish on Bitcoin, and more bearish on the market than bullish on the market. I know people are saying these are critical levels, these are long-term buys, but I do think we are going to see a lower wick on Bitcoin. I think we're going to see a lower wick on the S&P 500. Okay, AMC Gamestop. Please like the video if you haven't already. There's obviously a lot of stuff to talk about. We did actually get some news with AMC. First, AMC gets a nod to seek loss coverage in insurer settlement dispute. Now, what does this mean? Basically, AMC is under a class action lawsuit that from a while ago, basically for diluting the shareholders when it was said to be no. A shareholder has opened a lawsuit against them. AMC agreed to a $100 million settlement. However, their insurance dispute, right? AMC basically said this should fall under an insurer's loss. What's happening with the lawsuit is that the judge is saying, that probably could happen, right? That could be an insurable loss under the terms of its D&O insurance policy. Now, if this follows through, what this means for AMC is basically this is positive, right? It's going to give AMC either all of the 100 million or a chunk back of it to basically recover some of their losses, and it will help them financially as a company. It will help shareholders technically, right? Depending on what AMC does with this money. This is just a little bit of news that we have. Now, we also saw Robinhood just paid almost a $30 million fine over GameStop and AMC trading halts, settling with FINRA without admitting any wrongdoing. This is obviously bullshit. You see these all the time. It's a slap on the wrist. FINRA's scummy. The SEC is scummy. Robinhood's scummy. They're all in bed together. They say, hey, you make a ton of money under our roof, right? You got to pay, you got to pay your parents, okay? If you want to go and sell a bunch of cocaine while living at your mom's house and make, 50 grand a week, 50 grand a month, you're going to give your mom, 10 grand of that money, right? GameStop's chart, we have come down to what I would say is critical support once again. We see these lines right here drawn out in the chart, which show extreme support for GameStop, and one of them happens to be at Roaring Kitty's price average. Now, if GameStop did bleed off and sell further and can't hold above 22.25, either way, you have major buying down here below $22. Okay, below $21.75. It is going to be very hard for any short sellers to get GameStop up under $18.80. It just wouldn't happen, and it would not get under 14. So if you see a bloodbath in GameStop, write these down. If you see a flash crash, a fire sale before a short squeeze, write these levels down, because it's likely not going to get under that. And down here, right where the relative lows are, at $10 and $10.50. GameStop basically has more cash on hand to buy every single share at that price. It just wouldn't happen to get under that. We have raised the floor. GameStop is looking beautiful. Now, we do have huge sell walls that short sellers are obviously putting up. $37, between $37 and $48. And the reason being is because if we break back out of this trend and re-enter price discovery amongst an algorithmic break, a gamma squeeze, or something along the lines of that, things are going to get out of control. Okay, obviously the first couple sell walls are between 28 and 29 bucks, then 33 and 35, and then obviously those major sell walls above that. So what does this mean? I've said it before, right now we missed our window. We missed our point of interest window that I talked about coming mid to late February. And I said, hey, if we miss this window, unfortunately, we might have to wait until April 20th to be that next catalyst. With that being said, how does that make sense? How does that add up? Well, one, Roaring Kitty's numbers that he's given us, it's put very simply, but two, the bars pattern. We didn't want to wait this long, but the same setup, this isn't extended, the same setup from 2021 to where GameStop is at now, begins a melt up right here, right? You might see a pop April 14th and then lead into a melt up April 20th and start climbing and squeezing. And this is going to be a much larger squeeze into September, probably the squeeze. Now, a lot of you suckers, it's not going to squeeze till September. That's bullshit. Well, I'm not saying that. I'm saying that you're going to have momentum in April. You're going to have momentum in June. And you don't know how high that momentum is going to take you. It might take you to 66 bucks. It might take you to 80 bucks. It might take you to 120. And following that, you might have an algorithmic break late August coming into September. That takes you above $300, right? Above $1,000. You don't know what it's going to be. But right now, the good scenario is based on the bars pattern. It looks like GameStop is nearing a bottom, right? You can see that right here. Okay, so as far as AMC goes, same thing. It's holding up. We have a little bit of buyers here, not much volume. There's really not much happening. If we get any negative catalyst and flush down, we need to hold 263. If we scale higher, you have major resistance at 421, and then after that, 520. Okay, we obviously know shorts don't want this above 566. I believe there's some sort of debt conversion. We've talked about it before, and we see huge selling in this box. Huge selling before we even get to that range, right? They don't want it there at all. Now, if we get above that, obviously above $6 is where things get out of control again for AMC. And we actually saw that right here, right? The top of this candle wick was 587. And what happened after that? Things got out of control. We ran right up to $13. Overall, I'm still excited. This is the bars pattern for AMC. Unfortunately, with GameStop and AMC, right now it looks a little bit different. We are seeing a point of interest where AMC technically should squeeze off of this based on the bars pattern, how many days it's traded. This is the same exact amount of days where AMC should theoretically jump on Monday and begin gapping up. Do I think that's going to happen? I really don't know. If that begins to happen and the SPY isn't selling off more, then what you're seeing is likely another controlled move, but still another squeeze, right? It's when the SPY sells off so hard, there's a ton of shorts trapped here, and we get a V-shaped recovery. Okay, so if AMC does start gapping up, I would expect the SPY to be green, and this would be another sort of smaller squeeze instead of an absolute MOAS. But overall, guys, this is something that we're watching, something that we're paying attention to, and I hope we covered everything in today's video. I was going to cover Tesla, but I just don't think there's enough time for it. Maybe we'll cover it in tomorrow's video to prep you for the week. But yeah, I miss you guys. I'm glad to be back. It was fun. And also, while I was gone, we traded in Discord. We made a killing in Discord. It is just so great. If you're not in there, guys, I'm telling you, join the top link in the description. Stop waiting. There's no point to wait. I also post my trades as soon as I take them. We talk stocks and crypto in there all day long. Overall, best vibes. Whether you're a beginner or advanced trader, this is the place to go. If you want up to 30 free stocks, each valued up to $2,000 per stock, and earn 8.1% APY on your uninvested cash, use the second link in the description. Open a Moomoo account. It's a free broker, and once you sign up and deposit using my link, you will start earning free stocks. Also, you're getting 8.1% APY on your invested cash, access to level 2 order book data for free, trading options, going long, going short, viewing other exchanges, and more as a retail trader. If you're not following me on X, come over here and follow me because we are fighting against corruption for the last 4 years. So get over here. If you want to do the best fundamental analysis and want the best tools for it, that's the third link in the description. These are all affiliate links. I love you guys. God bless. Lottery Stocks out.